Yes, very good evening. Welcome to the very first lecture of CA Final Audit Fast Track course in 100% English delivery. So let me just spend 3 to 4 minutes on the coverage on how we are going to go about this particular course. So when you look at the syllabus which is uploaded as of now on the ICAI website, I am taking this lecture on 7th February 2023. Many professors do not say the date of the lecture in their videos because they want to run videos for a longer time, but I keep updating my videos, so I'm not worried about it. So I'm taking this lecture on 7th February 2023. As of now, the syllabus that is uploaded is for May 23 attempt, and also we can conclude that it is for November 23. If there are changes in future, we will cover those changes in this particular course itself, because this course will have validity till November 23 attempt, this particular English version of the course. All right. Now, when we look at the syllabus, which is uploaded on the ICAI website, so there are 18 topics, plus they have uploaded auditing pronouncements. So the whole syllabus that has been uploaded by the ICAI gets divided into 4 parts. One is the engagement and quality control standards. All right. So the standards on auditing. When I talk about engagement and quality control standards, you have 35 essays plus 1 SQC. All right. 35 essays plus 1 SQC. When you look at the ICAI module chapter number, it covers chapter 1, 2, 3, and 6 plus the auditing pronouncements. So when you look at the ICAI module, these are the references from the ICAI module. The second part of the syllabus is professional ethics. Do's and don'ts of a chartered accountant. Everyone is aware of this fact that there are 16 marks dedicated for professional ethics chapter. All right. And your best opportunity to score full 16 marks is this chapter, professional ethics. But it breaks my heart. Today morning, I was in a Zoom session of doubt solving for the students, and I evaluated certified copies of few students. And it was surprising, shocking, and disappointing to see that in professional ethics, out of the 16 marks, they are scoring 4 marks, 6 marks, whereas that is your best opportunity to score full marks. But don't worry, I will train you in such a manner that you score full 16 marks. So professional ethics is ICAI chapter number 18, the last chapter, which is the lengthiest chapter. Then we talk about company audit. See, when we talk about company audit, you have section 139 to section 148. But I think if you observe past paper trend, you would have understood that from section 139 to 148, rarely they are asking questions. All right. What they are asking questions on is CARO 2020 and some other aspects of company audit, which I will cover up. All right. It is ICAI chapter number 5. Let me tell you very clearly that if you thought company audit is only section 139 to 148, then you are wrong. There are many other discussions in company audit chapter, which I will be highlighting and which I will be doing. Then, if you see, I have given you 3 books. Book 1, book 2. Book 1 also has a question bank, separate question bank. Okay, so 2 books for part 1 and 1 book for part 2. What I have done is, for audit of various entities and special assignments, ask your heart. If you have already given the attempt, then ask your heart. When it comes to audit of banks, audit of insurance, audit of NBFC, audit of PSU, peer review, quality review, investigation, due diligence, forensic audit, internal audit, management audit, operational audit, idli vada, mendu vada, etc. Did you really cover those chapters? And the major mistake that finance year students commit is that they don't end up covering the chapters of audit of various entities and special assignments. They cover few topics, they leave few topics in option. And in order to create awareness for these topics, I have given a separate book too. And in this book, you have content as well as question bank. Don't worry about it. I hope you would have seen your material, but in this book, you have content as well as question bank. Do not worry about it. All right. The soft copy of this particular material, I have already uploaded on my app chat box if at all the books are still in courier stage and students wouldn't have received it. All right. So that the studies are not halted even for a minute. Now, all the remaining chapters, that means 1, 2, 3, 6 is for standards, 18 is for professional ethics, 5 is for company audit, and all the remaining chapters is nothing but audit of various entities and special assignments. All right. And we will be, as you would have understood from the first 3-4 minutes itself, because I am myself so much concerned about all the topics, we will be covering the topics in an exam oriented style. Do not worry about it. All right. Is this book different from the regular course book that sir provides? Yes, it is different. But the difference lies in a little bit in standards and auditing. And that also, if you ask me to give you a proof, I'll give you the proof. I can open regular course book in front of you and I can show it to you how I have changed. You know, in regular course book, we have one bare book with long paragraphs. We make students write the notes in regular course, correct? But what happens is that in fast track, you do not have too much time to make them write notes. Right? And that is the reason a combination of paragraph plus notes makes my book for standards, for professional ethics. All right. I have covered all the concepts. You can yourself tally. In fact, the concepts which are covered in my fast track book, you will not even find in some major author's book also. All right. So do not worry. I've covered all the concepts, just that I've presented in different style. So that, yes, technically the books are different, but the concept coverage is not at all compromised. All right. So do not worry about it. Chalo. So on that very good note, if I want to attract more admissions and if I want to attract more people to my course, then the best chapter to start with is professional ethics. Right. But I don't want to do that. I don't want to do that. Because first I want to touch the problem area, and that is the problem area is nothing but standards. And then after doing few lectures on standards, when you will get a little bored, you know, you will get a little loaded, then to freshen you up, we will take professional ethics, company audit in great details. Then again, you will start feeling interested, because whenever a new course begins, for first few lectures, students are interested. All right. And I want to capitalize on that particular interest of students. And I want to ensure that we are through with the topic of standards. So do not worry about it. Just keep following my instructions. For the students who are following my live lectures and who are watching it on day-to-day basis, even the recorded video students on T+1 basis, whoever is watching, I request that after I'm done with the lecture, on the next day morning, you should revise that particular part. Then you should attend the lecture. On the next day morning, you should revise that particular part. For a couple of hours in between, you can take up your FR, SFM, you know, some practical topic. All right. And you can revise whatever is discussed in the lectures in 2 to 3 hours in the morning part. 1 or 2 to 3 hours you sit for your practical subjects, and then again you attend the lectures. If you do this, there is nothing that can stop you from clearing audit subject. All right. Okay. Chalo. You have already taken the first step of rectifying your errors and ensuring that you are in a good position by subscribing to the course. Now let us ensure that this is the last time that you're attending audit lectures, and the next time we meet, you meet me as a chartered accountant. All right. Okay. So everyone over here, let us start with the topic of standards. Let us start with the topic on standards. Okay. All right. So the very first discussion is the introduction which they have printed in the module for engagement and quality control standards, which is nothing but your auditing standards. So everyone over here, we will go very fast with this. So engagement and quality control standards, which is nothing but your auditing standards. They have been issued by whom? By Auditing and Assurance Standard Board. AASB, Auditing and Assurance Standard Board, has been set up by the ICAI. Now, all the engagement and quality control standards can be divided into 5 categories. All right. So 1, 2, 3, 4, 5 categories. SQC, SA, SRE, SAE, and SRS. Every single category has some purpose. SQC is standards on quality control. In this category, we have only one standard. And that also is just to tell chartered accountants in practice that how they are supposed to implement quality control measures. I have seen that many students do not prepare for this standard, and then they see one question in exam from SQC which creates a problem. But don't worry, that will not be a problem anymore. So standards on quality control measures to be implemented by chartered accountants. Then the main category is standards on auditing. Whenever I say standards on auditing, today also some final year students, they think that standards on auditing are applicable to all types of audit. No, standards on auditing are only for audit of financial statements, audit of financial statements, audit of financial statements. They are not applicable for internal audit, systems audit, this audit, that audit. No, it is purely for audit of financial statements. Total, there are 38 essays, but you have 35 in your syllabus. 35 is your syllabus. Basically, you don't have the essay 800 series in your syllabus. So standards on auditing are for audit of financial statements. These numbers that are allotted, if you don't buy it, it is okay, that's fine. Standards on review engagement. Now I want everyone to focus because we are solving an examination question. Standards on review engagement. They have been given for review of financial statements. Now, what is the difference between audit of financial statements and review of financial statements? What is the difference between audit of financial statements and review of financial statements? If you have seen audit of listed entities, then in the first 3 quarters, the auditors of listed entities are not auditing, they are just reviewing. Review means a very moderate level of examination, where only some limited procedures are performed. I repeat, review means a very moderate level of examination, where only some limited procedures are performed. Whereas audit means reasonable assurance, high level of examination, although not a guarantee. So everyone tell me, what is the difference between audit and review? Audit is a reasonable assurance, high level of examination, not a guarantee. Review is limited assurance, lower than audit, moderate level of examination, obviously not a guarantee. Practical example of review is quarterly reviews of listed entities. Listed entities, quarterly financial statements being reviewed. Yes. The difference between audit and review is an examination question. Now, students, whenever I say examination question, the whole book is exam oriented, don't worry. But whenever I say examination question, all right, I will type a Q, I will write a Q over there. All right. That means you need to focus more on that particular box or on that particular paragraph. All right. Whenever I say examination question. So everyone over here, please, audit involves high level of assurance. It is not absolute assurance. It is also called as reasonable or positive assurance. Whereas review involves moderate level of assurance, also called as limited or negative assurance. Students, today, just give me 1 minute to teach one important concept of English. Okay. Tell me, everyone. Little bit of working I'll be doing over here. There is no need for you to do it. This is just to explain. Tell me, if I say Pragnesh is a good boy. Okay. Or I say Pragnesh is not a bad boy. This is point 1. Point 2 for the students attending live. Which one makes you feel better about Pragnesh? Number 1 or number 2? Type it. Which one makes you feel better about Pragnesh? Number 1 or number 2? Obviously, number 1. You know, in English grammar, this is called as positive statement structuring. All right. Whereas Pragnesh is not a bad boy. This is called as negative statement structuring in English grammar. Now, in audit, whenever we are giving audit opinion, all right, we will clearly say that to the best of our knowledge and information available with us, financial statements show a true and fair view. Positive way of saying things. Whereas in review, we will just say that nothing has come to our knowledge with the limited examination that we have conducted, which makes us believe that financial statements are materially misstated. So instead of saying Pragnesh is a good boy, I will just say Pragnesh is not a bad boy. Now everyone over here, look at this I have given over here in the example. Audit. We hereby express our opinion that to the best of our knowledge and information available with us, Financial statements are free from material misstatements and in accordance with the Schedule 3, Ind AS, whatever it is, applicable financial reporting framework. But whereas in review, look at this, with our limited examination, nothing has come to our knowledge that suggests that financial statements are not free from material misstatement. That is why review is a moderate examination. Review is a limited assurance. Review is a negative assurance. Audit is a reasonable assurance. Audit is a high level of examination. Audit is a positive assurance. I want a confirmation. Is everyone clear between the difference of this audit and review? Yes or no, sir? Yes. Yes. Okay. So that is the major difference between the word audit and review. Okay. So audit is SA, standards on auditing, whereas whenever you are conducting review, it is SRE, standards on review engagement. All right. So this was one examination point. But sometimes, you get assignments like audit of prospectus. Yes. Audit of offer document. Audit of projected financial information, some future cash flows and stuff. These kind of data and information is not covered in these two categories. That is why we have SAE, standards on assurance engagement. There cannot be one explanation for standards on assurance engagement because there are 3 standards and all 3 are dealing with something different. Sir, do we need to by heart that? No. In the existing syllabus, all right, because institute has not announced any new syllabus for May 23, so for sure you're not supposed to buy it. And further attempt students also will have to check the syllabus and then we will see whether you have to buy it or not. But May 23 is not supposed to by heart these standards on assurance engagement. All right. Just that you should know only one line, that in SAE, some other information is audited. Example, audit of prospectus. All right, it is something different than the financial statements. Okay, then we have SRS, standards on related services. SRS, standards on related services. Listen, sometimes your client will tell you, practicing chartered accountant, please help me in sorting my trade receivables. Practicing chartered accountant, please help me in making my stock production data summary and stuff. Practicing chartered accountant, will you please help me, all right, in this system implementation? All right. Now here the work is not of an examiner. We are not examining something, testing and expressing opinion. No. In SRS category, we are just helping our client to make some data. We are just helping our client to set some procedures. We are not acting as an examiner. We are just acting as an accountant over here or an assistant to the client. So SRS is standards on related services, performing procedures as agreed upon with the client. No assurance activity is involved. No assurance activity is involved. I repeat, no assurance activity is involved. Example, helping the client to prepare summary financial statements and stuff. As an accountant, not as an examiner. Now, I want a final confirmation. SQC standards on quality control, general quality control measures across all assignments. SQC is like your parents, no matter how many children do you have, but there will be one common set of instructions. So for all the assignments, some quality control measures are given in SQC. Standards on auditing is nothing but audit of financial statements, audit of financial statements, audit of financial statements. Standards on review engagement is review of financial statements. Audit, reasonable assurance. Review, moderate assurance. Standards on assurance engagement. Standards on assurance engagement is examining any information other than financial statements. There are 3 standards, all 3 dealing with different items. That is why I just gave one example, audit of prospectus. But May 23 need not by heart it. And if at all it is included in the new syllabus, November 23 onwards, then I will give extra videos on that. Standards on related services. Standards on related services. All right. SRS. Performing procedures as agreed upon with the client. There is absolutely no assurance activity involved. Someone is asking me over here about an example. I just said it, but I don't have space to write it. So example is preparing summary financial statements. All right. Someone in the live session is also asking me that can you give any practical example regarding review engagement? I think that student has joined late. I already said quarterly review of the financial statements of listed entities. All right. I did not write it because every single point I will not be able to write. I hope you understand. You have joined a fast track lecture. So I can cover all the concepts, but I cannot write every single point. Okay. Now everyone over here, I want a final confirmation. Are you clear with the introduction of the categories SQC, SA, SRE, SAE, and SRS? Yes. Now everyone tell me. Which category does not involve any assurance activity? Type. Which category does not involve any assurance activity? SRS. SRS has no assurance. We don't examine and express an opinion. All right. Which category has moderate assurance, limited assurance, negative assurance? SRE. And which category provides absolute assurance, guarantee? Which category provides absolute assurance, guarantee? None of these. Because as a practicing chartered accountant, we never provide guarantees. Unless it is an assignment of a forensic audit or investigation. That is a completely different thing, which I will discuss in non-essay part. All right. Good. Now everyone over here. In the first chapter of your module, I will always, after completing the discussion, I will always pause for 2 seconds. That will be your screenshot moment. If at all you are, clicking some screenshots. Okay. But I will not be able to pause for more than that. Okay. Chalo, let us move ahead. Now, if you look at your first chapter of the ICAI module, then there is some basic details given about the origin of standards and stuff. Till date, they have not asked question on this chart. But what if May 23 is the first attempt? All right. Because every time there are a couple of questions which they have never asked till date. That is why let us quickly go through this. So framework behind engagement and quality control standards, because it is given in the module, we will not ignore it. Golden principle. Do not ignore the module. Otherwise, ICI ends up ignoring us. All right. So Indian scenario, we have the ICAI. The ICAI first set up auditing practices committee in 1982. Then auditing practices committee issued a statement on auditing practices. Then in July 2002, auditing practices committee got converted into AASB. All right. Then statements on auditing practices were changed to auditing and assurance standards. And what you see now, 5 categories is nothing but the categories of auditing and assurance standards. Okay. Global scenario. The ICAI is a member of IFAC, International Federation of Accountants. This International Federation of Accountants is the global standard body for chartered accountants across the globe. All the member countries need to follow their instructions, just like we have World Trade Organization, World Health Organization. International Federation of Accountants has established International Auditing and Assurance Standard Board. And this International Auditing and Assurance Standard Board issues international auditing and assurance standards. Let me tell you, whether you study in India, Canada, Australia, UK, in fact, USA also, you will find that the standards and auditing discussion remains the same because all of us are following the instructions given by IFAC. Why I'm teaching this in a fast track course? I'm not taking your career seminar. This will help you to by heart one important 3 to 4 marks question. Objectives of IAASB. Sometimes, I need your talent of, through which you clear your BCom exams. All right. Your graduation papers talent. Come on. What will be the objective of IAASB? To issue high quality global standards, quality control standards, auditing standards, review engagement standards, assurance engagement, related services. Basically, to issue high quality global standards, correct? And then you can go on and on and on. And then they will keep on updating these things. Establishing standards and guidance for audit of affairs, for other assurance services, for quality control, updating standards and guidance for above matters. Right? And all of this should be high quality global standards. high quality global standards. I'm just trying to summarize first couple of pages of the module where they have given these things. So this can be your examination question. Objectives of IAASB. Objectives of IAASB. Okay. Then everyone over here, tell me, your syllabus is, come on, everyone needs to focus. Your syllabus is 1 SQC plus 35 essays. So your major part of the syllabus is 35 essays. Essays, standards in auditing, dealing with audit of financial statements. Tell me, if you are conducting statutory audit of companies, banks, insurance, obviously yes, you need to follow standards on auditing. My question to you is, if you are conducting audit of financial statements of a partnership firm voluntarily, because the partnership firm wants to voluntarily appoint you as an auditor, will essays still be applicable in this audit? The answer is yes. Because if you download auditing pronouncements, the very first page, which is called as the preface, it clearly says, everyone over here, as per preface to the auditing pronouncements, it is mandatory to follow essays. Mandatory to follow essays while auditing financial statements, irrespective of the entity. So no matter whichever entity you are auditing, but you must compulsorily follow essays when you are conducting audit of financial statements. Then, if you go to the ICAI website, and let me tell you what you're going to read now is MCQ question. If you go to ICAI website, sometimes you see that they have issued statements on XYZ matter. Sometimes you see that they have issued guidance notes on XYZ matter. So these statements issued by the ICAI, these guidance notes issued by the ICAI, are they mandatory or not? Statements. Whenever ICAI issues statements, whether it is on accounting matter or auditing matter, it is always mandatory. Whenever ICAI issues statements, whether on accounting matter or on auditing matter, it is always mandatory. But whenever ICAI issues guidance notes, whenever they say there is a guidance note, then generally it is recommendatory, unless otherwise specified. Sir, can you please elaborate on recommendatory unless otherwise specified? That means the first page of guidance note, the preface, if it is silent, then it is recommendatory. Generally, you should follow it, but exceptionally, you can follow your own judgment also. But in the first page of guidance note, if they have written that this is mandatory, then you will have to compulsorily follow it. So, come on, everyone. Essays, standards on auditing, essays, mandatory to follow irrespective of the entity that you are auditing. Second, statements issued by the ICAI, mandatory to follow. Guidance notes issued by the ICAI are recommendatory unless otherwise specified. But listen, I need to give some working for statements and guidance notes. I need to give you some working. All right. So I have one page on my PDF. If you do not have a page, you can take up a separate notebook. All right. And you can write something over there. Just that, always sit with some blank pages. It will help you throughout the lectures. All right. So that you can write it over there. And then what you should do is that blank page, wherever you have written extra note, to whichever page it belongs over here, you should just put it over there. All right. And then attach it later on after the lecture is over. Okay. Everyone over here. Documents issued by the ICAI. Because there are few points where I want students to write something. Documents issued by the ICAI. Standards on auditing, they are mandatory. I'm not giving any note on that now. Right? But I want you to write something over here on statements and guidance notes. Okay. So statements are mandatory. Guidance notes are recommendatory. unless otherwise specified by the ICAI. Students, what do you understand? What is the difference between the English word of recommendatory and optional? Optional is no one is worried whether you are following it or not. Recommendatory, what is the English meaning of the word recommendatory? That in general situations you must follow it. Only rare cases, exceptionally, you may be allowed to follow your own judgment. I will make you right away. Don't worry about it. First, let us finish about statements, mandatory. So, ICAI issues statements on accounting matters. ICAI also issues statements on auditing matters. Okay. Now it is common sense that for statements on accounting matters, preparation and presentation of financial statement is the responsibility of management. So please ensure that you are writing correct English. For statements on accounting matters, management should follow the requirements. Management needs to follow the requirements. Auditor will check whether there is any non-compliance or not. But tell me, if there is any non-compliance, that also some kind of material non-compliance from the statements. That means there is one statement on accounting matter which management has not followed. Then obviously somewhere you need to write it in your audit report. Sir, where we should write in audit report? Relax, please. I have a separate discussion on audit report. There I will tell you. But as of now, I need to fit this in your mind online. That if there is a non-compliance, then auditor should highlight it in audit report. If there is a non-compliance, then auditor should highlight it in audit report. Okay. For statements on auditing matters, obviously auditor has to follow it. Auditor must follow the requirements. You are not allowed to not follow the statements. That means you must follow the statements. However, due to any reason, if you are not able to follow the statements, see, there was a pandemic situation. We went through lots of problems. All right. And over there, many times auditors were not able to do certain things. Right? So if auditor is not able to follow the statements due to any reason, at least he is expected to highlight it in the audit report. All right. If auditor is unable to follow statements, then he should mention it in audit report. Yes, Monica. Then he should mention it in audit report. All right. When we talk about guidance notes, obviously recommendatory unless otherwise specified by the ICAI. Guidance notes are also on accounting matter and auditing matter. Guidance note on accounting matter. Guidance note on auditing matter. Let us talk about guidance note on accounting matter. If institute has issued a guidance note on any kind of accounting matter, all right, then generally management is expected to follow the guidance note. However, in rare cases, management can also follow its own judgment. My question to you is, listen to me very carefully, this can be your MCQ content. My question to you is that if management is not following the guidance note, but management has valid reasons, then will you as an auditor compulsorily highlight it in the audit report? Will you as an auditor compulsorily highlight it in the audit report? The answer is no, sir, not needed. You may or may not highlight it in audit report. But tell me everyone, if there is a non-compliance with statements, then should you highlight it in the audit report? Yes. So that is where the difference comes into picture. Be careful. Guidance notes on accounting matter. Management may follow its own judgment in exceptional cases if there are valid reasons to do so. Management may follow its own judgment in exceptional cases if there are valid reasons to do so. Auditor may or may not highlight such departures from guidance note. Auditor may or may not highlight such departures from guidance note. I'm going slow over here because I know how important it is for exams. Auditor may or may not highlight such departures from the guidance note. For guidance note on auditing matter, it is up to you. Normally, you should follow it. Only if you have valid reasons, you may follow your own judgment. Ordinarily, auditor is expected to follow guidance note. Ordinarily, auditor is expected to follow guidance note. In exceptional cases, if there are valid reasons, then auditor may follow his own judgment. Sir, can you give more examples of statements and guidance notes? See, you can download the applicable standards for May 23 and you will see that they have excluded the guidance notes and statements over there. So as of now, only this much knowledge is important from examination point of view. All right. Okay. Come on, quickly. So this is your screenshot moment. If you're lagging behind, this is your screenshot moment if you're lagging behind. All right. Now listen to me. Statements, mandatory, guidance notes, recommendatory, unless otherwise specified by the ICI. But if they ask you a 5 marks discussion on statements and guidance notes, then you should have this with you. Yes, sir. Yes, sir. Yes, sir. All right. Everyone over here. Everyone over here. Students, what I have done is the first couple of pages of the module, all right, where these basic procedural discussions have been given. I am done with that. Okay. Now, what I'm going to do is I'm going to clear some basic concepts. These concepts will help you to understand standards in a better manner. The problem is that the professors, the students, everyone is starting standards from, chalo, let us start, essay 200. No, you cannot start standards in that manner. If you are not aware about ABCD, you cannot learn English subject as simple as that. So in the same manner, if you are not aware about some basic concepts, you cannot even start with essay 200. But let me tell you, if I'm done, if you attend these basic concepts with me, then you will be very comfortable in the standards on auditing discussion. All right. Okay. Chalo, everyone, let us start. So let us start with the concept of applicable financial reporting framework. We'll be quick with this. Applicable financial reporting framework is nothing but the guidelines applicable to the entity based upon which entity prepares the financial statements. Can you give me examples? Schedule 3, accounting standards. If you combine both of that, it is nothing but applicable financial reporting framework for the companies. Yes, sir. So applicable financial reporting framework, technical definition over here. Financial reporting framework adopted by management and where appropriate those charged with governance. Students, you are comfortable with this word management and those charged with governance, no? Can I say management are the one who is execution, whereas those charged with governance is the one who are giving strategic direction. In small entities, management and DCWG may be one and the same. All right. In big entities, you will see the difference clearly between management and those charged with governance. So tell me, everyone, hello. CFO will be a part of M for management or T for TCWG? TCWG? No. CFO will be a part of management, right? Because he is the one who is involved in the execution part. Tell me, chairman, directors, audit committee, they will be a part of those charged with governance. Very good. This will be very helpful for me in further essays. So financial reporting framework, guidelines adopted by management and where appropriate those charged with governance in the preparation and presentation of financial statements that is acceptable in view of the nature of the entity. Hello. Can I say that if there is a trust NPO, you can't have P&L account, there will be an income and expenditure account. So whatever financial statements they are preparing should be acceptable in view of the nature of the entity and objective of the financial statements. And boss, it should also satisfy the requirement of laws and regulations. As an auditor, when you want to obtain understanding of AFRF, you need to look at law, AS, Ind AS, accounting interpretations, general industry practices, etc. Only then you will understand that what is the guideline based upon which they are supposed to prepare financial statements. So in simple words, applicable financial reporting framework is the guidelines based upon which they are preparing the financial statements. But now comes the final CA moment. Everyone over here. Whatever financial statements you see in practical life, when you download Reliance Financials, Tata Financials, normally those are general purpose financial statements. GPFS, financial statements prepared for all the users, all right, all the stakeholders. Financial statements prepared to serve common information needs of the majority of the users. Whereas sometimes entity prepares a separate set of financial statements, only one for one specific user. Example, preparing separate set of financial statements for bankers because they want to apply for some project finance. They will prepare balance sheet P&L in a different format as required by the bank. Now that is nothing but SPFS. The first 35 standards that you study, standards on auditing, first 35 essays, that means your syllabus deals with audit of GPFS, deals with audit of general purpose financial statements, your company final accounts. Example, your company final accounts. Yes? Okay, which is prepared for commonly used by all the stakeholders. Whereas in essay 800 series, we have audit of special purpose financial statements. But I will not talk more about essay 800 series because that is not there in May 23 syllabus. Yes, just that you should be aware about that there are two types of financial statements based upon purpose. One is GPFS, another one is SPFS. Everyone over here now, listen to me very carefully. Let me challenge you. If you are living in a cooperative housing society, listen to me for 2 minutes. It's a wonderful concept. If you are living in a cooperative housing society, Go to your secretary, check the audit report, or check the audited financial statements. Specifically, please check the audit report. In the opinion paragraph, you will not find the words true and fair view. You will not find these words, true and fair view. If you are thinking that in every audit report, we are supposed to write an opinion that financial statements show a true and fair view, true and fair view, true and fair view, you are wrong. True and fair view word is not used in all audit reports. Now, everyone, please focus for 2 minutes. You know, whenever you are expressing your audit opinion, our opinion is always whether financial statements, everything is documented in my book, so don't worry about writing it on it. Whether financial statements are materially prepared as per applicable financial reporting framework. Listen to me very carefully. Whenever you are giving audit opinion, you always use the word whether financial statements are materially prepared as per applicable financial reporting framework. Now, if you download Reliance audit report, you will see the words true and fair view. But if you download Cooperative Housing Society audit report, you will not see the words true and fair view. All right. In Reliance audit report, you will see the words true and fair view. Whereas in Cooperative Housing Society audit report, you will straight away see that true and fair view words are not used. They will just straight away say financial statements are prepared as per applicable financial reporting framework. You will just see the simple language. Why? What is the reason? All right. Everyone listen to me. Tell me, if you are conducting audit of Reliance Industries Limited, can you ask management to provide additional disclosures in addition to the ones given under Schedule 3 and Ind AS? Yes or no, sir? Can you ask management to provide additional disclosures in addition to the ones given in Schedule 3 and Ind AS? Yes or no, sir? Yes, sir. Because if you download Schedule 3, if you download Ind AS, it is clearly written over there that these disclosures are minimum disclosures. There is an additional responsibility on the management to provide additional disclosures to achieve fair presentation. It is clearly written in Schedule 3 and Ind AS. However, in Cooperative Housing Society, there is a format which is given by the registrar of cooperative societies. They are just simply supposed to follow that format. They are not supposed to take any other additional effort. All right. There is no effort taken to give additional disclosures in order to achieve fair presentation. In auditing standards language, Reliance financial statements, I will not talk about Adani's, Reliance financial statements are prepared based upon fair presentation framework. What is the meaning of fair presentation framework? The guidelines which are applicable to the entity needs to follow it, but entity also needs to take some more effort to achieve fair presentation. Whereas Cooperative Housing Society financial statements are prepared based upon compliance framework, where the focus is just on the compliance part. All right. That okay, you have prepared financial statements as per the format. Thank you. Doze off. Everyone over here, look at this. Applicable financial reporting framework. The general purpose financial statements that you prepare are divided into two: fair presentation framework and compliance framework. First, write down example. Company final accounts, Schedule 3 plus Ind AS or AS. Compliance framework example. Cooperative society accounts. Okay. Fair presentation framework, a financial reporting framework that requires compliance. Yes, hey, hello. For Schedule 3 and Ind AS also, you have to comply with that. All right. So you have to comply. But additionally, there is some more responsibility. A financial reporting framework that requires compliance with the framework. Plus, that means and. Okay. A, it acknowledges directly or indirectly that it is necessary for the management to provide additional disclosures beyond those required by the framework. Yes, sir. Or sometimes, have you seen this in your FR lectures or even in your practical life? That management follows a little different accounting treatment because the AS or Ind AS is not very clear on what to do. All right. But they will write it in the notes to accounts. Correct? That is technically called as departure. Departure does not mean violation. It means doing something different, but to achieve fair presentation. Look at this. Acknowledges directly that in rare circumstances, it may be necessary to depart. Depart means following a different treatment. Following a different treatment. Following a different treatment. It may be necessary to depart from a requirement of the framework. Highlight this with the darkest possible ink that you have to achieve fair presentation. All of this is taken, all of this is done to achieve fair presentation. And that is why in such audit reports, you can use the word true and fair view. But in cooperative housing society reports, you will not be able to use that. Look at this. Compliance framework. Compliance framework. Financial reporting framework that requires compliance with the framework. And there are no additional acknowledgements as given in fair presentation framework. There is no requirement to give additional disclosure. There is no allowance to depart a little bit from the framework, all right, to achieve fair presentation. No extra effort taken for fair presentation. Yes, I went in great details because this is very important concept for me. It will help me a lot in future. I want a confirmation. Is everyone through with this? Yes or no, sir? Yes, sir. Why we have studied this concept? Somewhere, if you can take some extra sticky note or something, or if you can write down, all right. Anyways, it is going to come in further lectures, but just to connect with the logic, why we have, I don't know, studied this concept. Okay. If somewhere, if you can manage and if you can write down. In audit of financial statements, prepared as per fair presentation framework. We can use the phrase true and fair view or presented fairly. However, in audit of financial statements, prepared as per compliance framework, we cannot use the phrase true and fair view or presented fairly. Unless otherwise required by law. Unless otherwise required by law. Tomorrow, if Cooperative Society Act says that you have to use this phrase, then we will use it because we don't end up compromising our business, boss. Okay. That is why never go against your laws and in-laws. Otherwise, they will mess up with your life, unless otherwise required by laws and regulations. Yes, yes. Okay. Everyone over here. I hope that you have written that particular note. Okay. Now, when we are done with this concept of applicable financial reporting framework, when I am teaching you SA 200 will go at a faster speed. When I am teaching SA 700 will go at a faster speed, because these concepts will have so many implications over there. All right. So please keep on revising, please. Now, come on. This is very basic. Premise relating to responsibilities of management. Premise means the basic points, or the basis, the base. Relating to responsibilities of management and those charged with governance based upon which audit is conducted. Everyone is aware about this. Preparation, presentation of financial statement is the responsibility of management. Design, implementation and maintenance of internal control is responsibility of management. Providing information to the auditor is also the responsibility of management. Providing nutrition to the auditor. Chalo. Responsibility for preparation, presentation of financial statements is the responsibility of management and those charged with governance. Design, implementation and maintenance of internal control is also their responsibility. So F for financial statements, I for internal control. All right. And then look at this. Providing auditor with all information relevant to preparation, presentation of financial statements. Any additional information that auditor may request. Unrestricted access to those from whom audit evidence is required. All of this is responsibility of management and those charged with governance. And it is not some new point. You are aware about it. All right. Okay. Students, this particular point will be helpful in SA 210, SA 700. In 210, we will be talking about letter of engagement. 700 will be talking about audit report format. So these points are written in the letter of engagement also. These points are written in the audit report format also. I mean, in the audit report also. All right. So you should always be aware about these points. Yes, Monica. Everyone over here, come on, man. You are aware about this point. You are aware about the concept of sufficient and appropriate audit evidence. I'll be fast with this. So everyone understands sufficiency means quantity of the information. Why I'm teaching these concepts? Because if you're not clear about these words, I will not be able to go ahead in my subject on it. And appropriateness means quality of the information. So whenever I say sufficient and appropriate audit evidence, that means I need a quantitative information also as well as quality of information. Hey, hello. Shh. What do you understand by the word quality? Relevance and reliability. You don't need to write, Ray. I have written everything over there. I'm just writing it over here so that you stay focused. All right. So everyone over here, sufficiency means quantity. Appropriateness means quality. Quality means relevance and reliability. Do you think that I'm worried about your concept over here? No. I'm worried about the words that you will use. Relevance means logical connection. Reliability means the information should be complete and accurate. And quantity means how much information do you want? Now listen to me very carefully. You can have an examination question over here. Hello, I just forgot to write it. I think everyone understood that this whole concept of compliance framework and fair presentation framework was a Q, examination question. All right. Just that I said it, but I did not write it. I will be writing Q wherever things are very sensitive. So look at this. Sufficiency of evidence. How much information do you want? It will always depend upon your misses. Sufficiency will always depend upon your misses. Yes, that's the harsh truth of life. It will depend upon materiality of financial items, because if the items are highly material, you need more evidence for that. And then comes the favorite word in audit subject, risk of material misstatement, the chances of error and fraud. Tell me, if the risk of material misstatement is high, then can I say you will need more evidence? Yes or no, sir? Yes, sir. So risk of material misstatement, whether due to fraud or error. Then size and characteristics of the population. Means size of the amount, nature of the account. Right? Things depend upon that also. The volume. Right? That is size and characteristics of the population. So sufficiency will depend upon my misses. Sir, what will be the question? That sufficiency depends upon which factors? Sir, when this question is asked, should we write only these 3 lines? No, Ray. You will get one paragraph on each line, because materiality will be discussed in 320. Wrong will be discussed in essay 315. Size and characteristics of the population will be discussed in essay 530. So I'm anyways going to discuss over there. Why to write big paragraphs over here? All right. Just few basic points, please, everyone over here. Audit evidence is always cumulative in nature. What is cumulative? If we are verifying purchase, we will consider purchase order, purchase invoice. All right. Then obviously the communication from the supplier, the goods received note. So we gather information from various sources. We gather information from various sources. That is why we say audit evidence is always cumulative in nature. Then your evidence is always not conclusive, right? You are not playing CBI over here. All right. Your evidence is normally persuasive. What do you understand by the word persuasive? Convincing. Not 100% proof, but at least convincing. Yes, sir. Auditor can obtain evidence. Either you can obtain evidence from accounting records, journal, ledger, contract, invoices, accounting records, or you can obtain evidence from other information supporting accounting records like minutes of meeting and stuff. Right. Okay. Tell me everyone, hello, let me just test your common sense. Tell me, if you are not able to perform physical verification of inventory due to some unavoidable circumstances, then can I say you will skip the verification of inventory in that year? Yes or no, sir? No, sir. We will look at stock statements, stock register, documents, the consumption of the stocks. We will try to tally the amount. Yes. So in any auditing situation, if intended evidence is not available, then auditor shall perform alternate audit procedures. If you do not receive reply from the debtor, we don't skip that debtor, right? We will try to verify it from the ledger, from the other evidences, from the invoices, from the bank statements. Okay. Yes, performing alternate audit procedures. Acha, can I just ask you one more question so that we are very clear with the things that we are going to study? Tell me everyone. Now this is like, I'm a doctor and you are my patient. I'm testing you. I'm testing how ill you are. Okay. So everyone over here, please reply, only then I will be able to understand whether to teach this concept or not. Tell me, purchase invoice is an internal evidence or external evidence? I for internal, E for external. If you go wrong, it is completely fine. If you go wrong, it is completely fine. The chat box is on host only. Only I will understand that and I will not shout at you. Don't worry. And you will not believe 30 to 40% students are writing internal evidence. No finance year professor will teach internal and external evidence in fast track batch. But I will have to take it up. So everyone, very quickly. Your type of audit evidence. No, I will just keep this for the screenshot moment. Type of evidence is divided based upon two categories. And based upon source of information and based upon nature of information. Nature of information is whether it is a visual evidence or it is a written evidence or it's an oral evidence. Okay. Source of information depends upon the origin of the information. If information originates, not the current location, originates from sources within the entity, okay, then it is internal evidence. If it originates from sources outside the entity, then it is external evidence. So listen, purchase invoice, although currently it is with the entity, but it originated from the supplier. That is why purchase invoice is an external evidence, because we need to focus on the origin. All right. So example, purchase invoice. internal evidence. Example, sales invoice, although the original may be with the customer, but obviously it originated from the entity. Sales invoice. All right, I will just give more 60 seconds to this concept. Rapid fire round. Bank statement, I for internal, E for external. Rapid fire round. Let me have my lens card specs and let me on my Jacko lights. Okay, rapid fire round. Tell me. Yes, bank statement is an external evidence, comes from the bank. Then tell me everyone, BRS. BRS is an internal evidence, originated within the entity itself. All right. Salary slip, internal evidence. External confirmation from debtors, external evidence. Okay, done. Always focus on the origin when you want to find out the internal or external evidence. All right. So I was not expecting to teach this point in fast track. Okay, but that's fine. So I am just pausing for a second, screenshot moment. Yeah. All right, because if you're not aware about these words, I will not be able to teach you basic standards. Now everyone over here, tell me, just speak in a practical language. All right, I am writing some audit procedures. Thank you. I am writing some audit procedures. Final CMA, it is not that there are some demons in standards. No, just that you need to clear some basic concepts of the students, and then students will themselves start understanding the standards. All right. Kya itna standards. Okay. I am writing some audit procedures and you tell me why I am performing this. Okay. First, physical verification of inventory. Why I am doing this? To test dash of inventory. To test dash of inventory. Try to test dash of inventory. Perfect. The actual word is to test the existence of inventory. I want to know whether inventory actually exists or not. Right? So I am performing physical verification of inventory to test the existence of inventory. Then tell me, I am calculating the cost and NRV of the finished goods. The finished goods. Tell me, I am trying to test dash of the inventory. Valuation, perfect. Valuation of inventory. Okay. One more time. Chalo. Let us say that I am verifying whether inventory is properly categorized into finished goods, raw material, WIP. No, finished goods, raw material, WIP. Whether it is properly categorized into this. Yes, I am trying to test the classification of inventory. Very good. I am trying to test the classification of inventory. Chalo, let us continue so that we can finish off the concept in next 3 to 4 minutes. Tell me, I'm enjoying this discussion with you. Let us say that I am verifying whether inventory is shown under current assets with proper notes to accounts. I am verifying dash of inventory. Presentation and disclosure. Presentation and disclosure of inventory. Super. Let us say that I am verifying whether management has given inventory as a collateral against the drawing power. All right. I'm trying to verify. Yes. I'm trying to verify the rights and obligation. Very good. I'm trying to test the rights and obligation of inventory. I mean, of the entity over the inventory. Then tell me, everyone, I am trying to verify whether there is any omission in the inventory balance. I am trying to test superb. I am trying to test completeness of inventory. Very good. Let us say that I am verifying whether invoices, production, dispatch up to 31st March has been considered. Very good. I am trying to test the cutoff. That means whether the transactions balances are recorded in the correct accounting period. I am trying to test the cutoff in recording inventory. All right, cutoff procedures. Tell me, I am teaching which concept of standards on auditing? The concept of, yes, very good. But don't worry, for the students who are not aware about it, I am anyways explaining the concept of management's assertions. Tell me, if I say this, that means I'm sleepy. All right. I'm angry. So similarly, preparation and presentation of financial statement is the responsibility of management. So in the balance sheet and P&L, what do you find? TBD, transactions, balances, and disclosures. They are nothing but assertions of the management. Welcome to the next concept, which is extremely important in final CA, whether you talk about MCQ, brief answers, because you will not be able to write anything if you don't know the concept of assertions. Everyone over here. Concept of assertions. Concept of assertions. Yes. Assertions are nothing but representations made by management in the financial statements. Representations made by management in the financial statements. Achha, someone is asking me about this particular PDF. This PDF. This is my rough working. But do you want me to upload it in the app chat box? I will upload it in my app chat box, but this is my worst presentation. I mean, it is just a rough working. All right. As per the students also, you will not find properly decorated notes and stuff. Okay. But I'll just give it as a, I will name that PDF also as rough working. Okay. Everyone over here, my best presentations are over here. So assertions are nothing but representations, explanations made by management in the financial statements, either directly or indirectly, about Deepika Padukone, about TBDs, about transactions, balances, and disclosures. So whatever management is trying to explain in the financial statements about TBDs is nothing but management's assertions. One more time. Whatever management is trying to explain in the financial statements about TBDs is nothing but their assertions. And tell me, listen, kids are going to say, kids, auditor needs to obtain audit evidence to verify financial statements. Adults are going to say, auditor needs to obtain audit evidence, to form an opinion on the financial statements. But the legends will say that auditor needs to obtain sufficient and appropriate audit evidence to verify management assertions in the financial statements about transactions, balances, and disclosures. Are you with me, legends? Yes or no, sir? Yes. All right. So everyone over here, auditor needs to obtain sufficient and appropriate audit evidence to verify management's assertions in the financial statements. So look at this: assertions about transactions, assertions about balances, assertions about presentation and disclosure. Okay. What I taught in that PDF practically was assertions about balances. Huh? Whenever there is any balance in the balance sheet, we want to verify EVR. Majorly it is EVR. Existence, valuation, rights and obligation. Whether assets and liabilities actually exist as on the balance sheet date. Valuation, whether appropriate amounts and adjustments are there. All right. Rights and obligation, the control, the liabilities over the assets and liabilities. And the completeness, that means there should be no omission. Correct? Correct. Presentation and disclosure, all of that is there. Don't worry. Now, everyone over here, assertions about transactions. I've written the main assertions that you need to verify. Everyone, purchase. Chalo, now let us go orally. All right. Chalo, I will try to write it very quickly. Audit procedures and why we are doing it. Okay. Chalo, I am trying to calculate. I'm calculating the GST and basic invoice amount. What am I trying to verify? Whether this basic invoice amount and GST is correct or not. What am I trying to verify? Yes, I am trying to verify accuracy of transactions. First of all, I'm trying to verify accuracy of the transactions, accuracy of the amounts, amounts in the transactions. Whenever I'm calculating the amount of a P&L item, I'm verifying accuracy. But when I'm calculating amount of a balance sheet item, I'm verifying valuation. One more time. Whenever I'm calculating amount of a P&L item, I'm verifying accuracy. But when I'm calculating amount of a balance sheet item, I'm verifying valuation. Yes, sir. Yes, sir. All right. So I'm verifying the accuracy of the amounts. All right. Then, to confirm the invoice with third party, I'm just trying to confirm that particular invoice with third party. You know what? I'm trying to verify whether this has actually occurred or not. Because I want to eliminate my doubts of a fake transaction. And I also want to verify whether this is complete and there is no omission over here. All right. So I'm trying to verify the occurrence. Even by verifying one item, even by performing one procedure, you end up verifying multiple assertions. Now, someone in the chat box, when I was saying that I'm calculating GST and basic invoice amount, someone wrote occurrence. Very good. Even through invoices, you can verify occurrence. But when I say I'm calculating amount, main answer was accuracy. But yes, the students who wrote occurrence were also correct. All right. Okay. Then, whether invoice is recorded in the correct accounting period. Whether invoice is recorded in the correct accounting period. Cut off, yes. These are the main assertions. I'm not giving more examples. Hello, tell me, in a manufacturing entity, interest from FDs will be shown as revenue from operation or other income. Obviously, it will be shown as other income. What is this? Classification, presentation and disclosure. All right. Okay. Everyone over here. Chalo. Assertions about transactions. O for occurrence, whether transaction has actually occurred or not. C for completeness and stuff, that is fine, no omission. C for classification. C for cutoff. Classification is correct accounts. Cutoff is correct accounting period. Okay. Completeness, no omission, and accuracy is about the amounts. So everyone over here, for assertions about transactions, give me the main assertions. Yeah, OCAC, OCA, there are lots of points that you can write. Tell me the main assertions. For exams, the main assertions. In case of transactions, hello, in case of transactions, the main assertions are occurrence, whether it has actually occurred or not. Accuracy, whether it is recorded at the correct amount or not. And cutoff, correct accounting period. The main assertions for transactions. Huh? OCA, OCA. And then Main assertions for balances. Main assertions for balances. Whether balance actually exists or not. What is the value and what are the rights and obligations. Otherwise, the common assertions for transactions as well as balances. Common assertions are about classification, correct accounts, all right, completeness, and presentation and disclosure. Sir, how this is going to help us? Students, MCQs. Tell me, whenever I am performing any audit procedure, can I say it is always to verify some or the other assertion? Yes or no, sir? Yes, sir. So they will give you the procedure in the question and they will ask you to tick which assertion you are verifying. And you will not become an expert of this concept in one lecture. Let me tell you guys, I asked you some easy questions over here. I was very happy with your answer, let me tell you. But I asked you some easy questions over here. No? Physical verification of inventory to test the existence. All right. Was an easy question. Let me ask you a tough one. Calculating depreciation charged on fixed assets. Calculating depreciation charged on fixed assets. Give me the assertion that I'm verifying. Depreciation charged on fixed assets. No, you have to give me answer from these words only. All right. If I open the chat box now, then what you will see is cocktail. Mocktail is kids. What you will see is cocktail. All right. Of answers. Just think about why I am calculating depreciation. To verify the accuracy of depreciation, or to verify the valuation of fixed assets. By calculating depreciation, you will get WDV, written down value. All right. So you are calculating depreciation for verifying the value. So it is valuation. Some students just thought depreciation is a P&L item. P&L item, when we are calculating amounts, it is accuracy. Brrr. Just think about why you are doing it. All right. And you will get the answer from your heart that we are trying to calculate value. So for the students who said valuation, congratulations. For students who did not say valuation, congratulations to you too, because you are trying to rectify your errors. So you will become an expert of the concept of assertions in my 500 series, where we will discuss about audit evidence and what are the different assertions that we are trying to verify. All right. Okay. I want a confirmation as of now. Are you through with this concept? Yes. Yes. Sir, why are you not reading the last box? Are Baba. Whatever we are verifying, occurrence, accuracy, cutoff, existence, valuation, rights and obligation, for every single item, we will have to see the presentation and the disclosure. So in presentation and disclosure, if you see the minute way of formatting, I have not highlighted anything in presentation and disclosure. Because whatever we verify for transactions and balances, for that we need to check presentation and disclosure. So I don't even want you to by heart that. Is everyone clear with this now? Yes, thank you so much. Everyone over here now. Come on, let us move ahead. Let us move ahead. Do not break the tempo. You know that in audit subject, we are going to, talk about audit procedures, risk assessment procedure, further audit procedure. You would have heard such words, test of controls, test of details, correct? But I want you to understand properly about these audit procedures. So give me some 8 to 10 minutes so that I can clarify it properly. All right. Everyone over here. When we use the word audit procedures, correct? Obviously, The very first procedure that you are going to perform is risk assessment procedure. As per SA 315. Risk assessment procedure as per SA 315. Then, after you are done with risk assessment procedure, it will help you to find out ROMUM, risk of material misstatement. What can go wrong, how much can go wrong, where there could be error, where there could be fraud. After you are done with finding the risk, cash misappropriation, there is a risk of inventory misappropriation, there is a risk of overvaluation, undervaluation, there is a risk of, yes, omission in the disclosures. After you are done with finding out the risk, then you will perform further audit procedures. As per SA 330. They are also called as responses to the assessed risk. They are also called as responses to the assessed risk. My God, at 3:30 I started the lecture. And why students are still attending the live session? Because first they have identified the risk. There is a risk of failure in audit subject. We will not be able to complete our recorded videos. And then they are responding to the risk. This concept is there bloody everywhere in your personal life, professional life, everywhere. So everyone over here, whenever you are talking about risk assessment procedure, the first line will always be, first understand the business of the entity. Understand the entity and its environment. Obtain knowledge of client's business. Why do you want to obtain knowledge of client's business? Sir, so that we can understand their business strategy, how they are doing their business. Oh boss, this is not MBA class. This is audit lecture. We are understanding the entity and its environment so that we can get answer to the question, what can go wrong in these financial statements? What can go wrong in these financial statements? All right. By understanding the entity and its environment, you will come to know about inherent risk. Sir, what is inherent risk? We come to know a raw analysis of what can go wrong. In the financial statements, what is material, what is immaterial, basic understanding we will get from that. We are not attending MBA class. You should know why we are doing a particular procedure. It will help me to answer some examination questions. Chalo everyone. So I am now giving you an example, asking you a question. You tell me the inherent risk over here. DMart. In DMart business, what can go wrong in their financial statements? Cash misappropriation. It's a high cash turnover entity. Yes. Stock misappropriation. Yes. Yes. Sir, now some students will say, sir, I have visited DMart. You know, in DMart, they have very good internal control system. Yeah. You cannot just take away stock from there and you cannot just misappropriate their cash. Boss, you are discussing internal controls with me. I have not yet come to that point. When I say inherent risk, you don't talk about the systems and the controls. You just tell me based upon their business what can go wrong. It's a raw analysis. It's a raw analysis. All right. That is why first step is always understanding the entity and its environment to find out what can go wrong. Then second point is always evaluating their accounting system and internal controls. What is their system? What are their manual controls? What are their automated controls? All right. How they are handling everything? What are the steps taken by the management to prevent and detect fraud and error? Once I obtain an understanding of this, I will come to know about control risk. Sir, what is control risk? I will come to know about the risk of control failure. I will come to know about the risk of control failure. Okay. And once I am aware about the inherent risk and control risk, then I will come to know about the wrong Risk of material misstatement. Finally, what can go wrong, how much can go wrong, where there could be error and where there could be fraud in the financial statements. Chalo everyone, we will play a rapid fire round. I will give you one financial item. All right. And you tell me what is the inherent risk over here. Just simply tell me what can go wrong in the financial statements. Salary. Chalo, rapid fire round. Salary. What can go wrong in that salary? Clerical errors, yeah, calculation errors, clerical errors, inflation of the amounts, calculation, TDS, very good, superb. All right. Inventory, overvaluation, undervaluation, right? Valuation part. Legal cases, sir, they will omit it, or instead of creating provisions, they will just show it as contingent liability. Yes. Judgmental errors. Who said high fees? Okay. Yes. Okay, they may try to inflate the expenses through professional fees. Okay, understood. Very good. So everyone over here, when I talk about inherent risk, you don't talk about systems and controls and stuff. You don't talk about all that. Correct? You just tell me about what can go wrong. Then we try to evaluate their systems and controls, whether it is a manual system, automated system. If it's a manual system, there can be multiple chances of clerical errors. If it's an automated system, if it is not programmed correctly, then the overall financial item can go wrong. Correct? And then we talk about the control risk. And then we come to know about risk of material misstatement, whether it is due to fraud or error. Correct? Correct. Okay. Now listen to me. Whenever we are analyzing the risk of fraud or error, we need to analyze at assertion level and at overall FS level. Don't worry, this is so simple. Tell me, assertion level, chances of errors and fraud in individual TBDs. Example, risk of misappropriation in inventory. Risk of misappropriation in inventory. This is ROMM at assertion level. But tell me everyone, let us say that you are conducting audit of a startup entity and they are trying to attract investors. Right? Then in that case, can I say there is a risk of overall manipulation of the financial statements? Yes or no, sir? Yes. This is called as ROMM at overall FS level. All right. Example, Adani. Example, audit of entity trying to attract investors. Audit of entity trying to attract investors. All right. So ROMM needs to be analyzed at assertion level and at overall FS level. You have no idea how helpful this will be in answering some really technical questions of audit subject. So everyone, come on, tell me. Give me the full definition of risk assessment procedure. Give me the full definition of risk assessment procedure as per SA 315. Whenever you are conducting audit of financial statements of an entity in any auditing situation, you need to understand the entity and its environment, obtain knowledge of client's business to find out the inherent risk. Then you need to evaluate the entity's accounting systems and related internal controls to identify the control risk. This will help the auditor to identify and assess risk of material misstatement at assertion level and at overall financial statements level. I want a confirmation. Is everyone through with this? Yes or no, sir? Yes, sir. There is a difference between just understanding the concept and doing it in technical language. All right. Even before attending my lecture, you were aware about what is ROMM. We are now doing it in technical style. So once I am clear with what can go wrong, how much can go wrong at assertion level and at overall FS level, then next point, it helps auditor in determining the NTE, nature, timing and extent of further audit procedures. There is nothing but responses to the assessed risk. Further audit procedures are divided into two parts: compliance procedure and substantive procedure. Compliance procedure is nothing but test of controls. Students, I want you to understand one very big difference. In risk assessment procedures, we try to understand, and we try to evaluate things. Whereas in further audit procedures, we test. You know what? In why we are learning this, let me explain so that you can focus. In SA 550 related parties, then we will find it in SA 402 using service organization, SA 570 going concern. In multiple essays, the content is divided into two parts. One is risk assessment procedure, another one is further audit procedures. In some essays, the content is divided into two parts. For example, related party. How to understand the related party relationship and transactions, and how to test them. All right. Students are not recognizing the question. In the last line of the question, if they are asking you to understand a particular item, that means they are asking you to write the risk assessment procedures of that essay. Whereas in the last line of the question, if they are asking you to obtain audit evidence, then they are asking you to write further audit procedures of that essay. Are you with me? Yes or no, sir? Yes, sir. So whenever the question is dealing with understanding, evaluation, it is always risk assessment procedure. Whenever the question is dealing with test, examine, verify, obtain evidence, the question is of further audit procedures. I repeat, whenever the question is talking about understanding, evaluation, it is risk assessment procedure. Whenever the question is asking you to obtain audit evidence, test, examine, verify, it is always further audit procedures. Because this will help you in understanding many questions. Okay, everyone over here. Further audit procedures. And don't worry, I will say this again in those essays also. Further audit procedures are divided into two parts: compliance procedure and substantive procedure. Compliance procedure is test of controls, where we actually test the system, whether it is functioning effectively or not, verifying operating effectiveness of the controls, and to find out, see, testing is going on, and to detect deviations, that means if the controls are not followed properly. Whereas in substantive procedures, we will perform test of details. All right. And we will verify ACPD, amount, classification, presentation, disclosure. Students, I'm just giving you a procedure. Tell me, this is test of control or test of details. All right. So that I will understand whether you have understood it practically or not. I am verifying the authorization of expenses, that who has authorized expenses. It is TOC or TOD. TOC or TOD. Type bindas. You can commit errors over here, not in the examination hall. All right. Obviously, when I am verifying authorization of expenses, it is test of controls. Now, some students are analyzing, okay, authorization of expenses is a detail that you are verifying. Authorization of expense is a system which has been set up by the management, which I am verifying. So it is test of controls. But tell me, I am calculating the amount of the expenses. This is test of details. In audit, you need to understand the words as given over here, not in your normal dictionary meaning. If you are verifying any detail, that does not mean it is test of details. When you are verifying ACPD, amount, classification, presentation, disclosure, through any procedure, that is called as test of details. But whenever you are verifying a system process, that is test of controls. So if I am testing authorization of expenses, it is test of controls. All right, tell me everyone over here. I am calculating the cost and NRV of the inventory, that is TOC or TOD? TOD. All right. I am verifying the instructions given by the management to the employees on how to count the inventory. TOC. Test of controls. All right. Chalo, one more time. Last. You are conducting audit of my entity, the Audit Academy, and you asked me about admission procedure. I told you that we have one app through which you have to take admissions, and the GST invoice and everything is generated through that app only. This is TOC or TOD? Hello. This is risk assessment procedure. क्या है यार, ट्रैप में आ गए. All right. This is risk assessment procedure. I said you were trying to understand my admission procedure. Did you actually check the fee receipts? Did you actually test my system? No. You were just conducting inquiries to obtain an understanding. So that is risk assessment procedure. This is where students are not understanding the content of essays. Go slow, but go proper. All right. So whenever you are trying to understand the business, the systems, the procedures, that is risk assessment procedure. Whenever you are trying to test the system, or test the amount classification, presentation, disclosure, that is further audit procedures. Am I clear with this? Yes or no, sir? Yes, sir. But sir, at inter-CA level, we have also understood that there is something called as analytical procedures. Will you please explain? Obviously, yes. But just hear me out for a minute, please. Let us say that analytical procedures, and this note I have in essay 520, analytical procedure also, so don't worry about writing it. Analytical procedures is nothing but ratios, comparisons, trend analysis, etc. These type of procedures. Now everyone over here, let us say you are conducting audit of financial year 22-23. This is your year that you're auditing. Now in financial year 22-23, you saw the turnover, you saw the GST paid, all right, and you checked the percentage. This is using analytical procedures when you are performing test of details. Can I say you are basically trying to test the turnover and GST through the ratio analysis? Yes or no, sir? All right. Yes, this is called as using analytical procedures as substantive audit procedures. That means by using ratios, comparisons, trend analysis, you are trying to test a particular item. Okay. But let us say that when you were planning the audit, okay, what you did is you did a last 5 years trend analysis. And on last 5 years trend analysis, you saw that the debt is increasing and the valuation of the company is also increasing. And the company is getting a credit rating of A+. You know, last 5 years trend analysis, the debt is increasing, the valuation is increasing, and the company is also getting a credit rating of A++. What is this bullshit? Can I say something is going wrong over here? Yes or no, sir? Yes, sir. Okay, Onkar. Can I say something is going wrong over here? Yes or no, sir? Yes, sir. So can I say that by performing this trend analysis, you have used analytical procedures? But tell me, did you test any item? Were you testing any item? Answer me yes or no? No. Can I say you have used analytical procedures for risk assessment? You have used analytical procedures for risk assessment. Yes. You have identified ROMM through analytical procedures. Now listen to me very carefully. Analytical procedures, that is ratios and comparisons, can be used for finding the risk, and it can also be used for testing the items. All right. So if I want to act like a salesperson, analytical procedures are very flexible. You can use it for risk assessment also, and listen, you can also use it for test of details. All right. When you are using analytical procedures as a risk assessment procedure, No, when you are using analytical procedures as a risk assessment procedure, we will say that you are in SA 315. But when you are using analytical procedure as a substantive audit procedures, we will say you are in SA 520. So 2 times, I repeat, 2 times, we will be discussing analytical procedures. One is for risk assessment and another one is for substantive audit procedures. So everyone over here, I hope that you are understanding this now. Auditor also applies analytical procedures while performing risk assessment and further audit procedures. Do not worry, this concept is elaborated in SA 315 and SA 520. I have a note for this. But if at all you want a screenshot moment, I will upload this PDF. But if you want a screenshot moment, then this is it. Right. Okay. For analytical procedures. Yes. Thank you. Now, everyone over here. So come on. Just give me in 30 to 40 seconds. Just give me this concept. Audit procedures. Audit procedures. First, risk assessment procedure, we understand the entity and its environment. We evaluate the accounting system and related internal controls to identify and assess risk of material misstatement at assertion level and at overall financial statement level. This will help us to determine the nature, timing, and extent of further audit procedures. That is nothing but compliance procedure and substantive procedure, test of controls and test of details. And along with these procedures, we also use analytical procedures, that is ratios, comparisons, and trend analysis. All right. Now listen to me. You will start understanding the technical language. Chalo, I'm saying one paragraph of audit in technical language. You tell me whether you are understanding this or not. So, auditor needs to perform risk assessment procedures in order to identify and assess risk of material misstatement at assertion level and at overall financial statement level, so that auditor can determine the responses to his assessed risk by performing further audit procedures in order to obtain sufficient and appropriate audit evidence to verify management's assertions in the financial statements. Are you clear with this? Yes or no, sir? Yes. So, kya technical language, technical language, technical language? If you start understanding the concepts, you will start understanding the technical language also. Okay. Now, everyone over here, sorry for that step. Now, listen to me. Because you are clear with this concept of inherent risk, control risk, this is the best time to also discuss the concept of audit risk. All right. Best time to also discuss the concept of audit risk. Okay. Chalo. Let us start with this discussion of the concept of audit risk. All right. So let us start with this discussion of audit risk. Listen. When it comes to the concept of audit risk, in simple English, what is audit risk? Risk of expressing inappropriate opinion. You end up giving a different opinion, wrong opinion. Everyone, please come with me, write down over here. Audit risk is nothing but risk of expressing inappropriate opinion. Don't think as of now what to write in the first box, second box. All right. Just go with my flow. All right. Risk of expressing inappropriate opinion. But wait, we are still supposed to write something more. Listen, can you please draw one line over here just after this line is over, so that we can use the space properly? Okay. Tell me, everyone. Let us discuss about reality versus audit report. Let us say that the reality is that financial statements, the reality is that financial statements do not show a true and fair view. And you have written in the report that financial statements show a true and fair view. The reality is that financial statements do not show a true and fair view. But you have written in the report that financial statements show a true and fair view. This is the problem. This is the problem. All right. This is the risk that we are talking about. Let us talk on the reverse side. Let us say that reality is that financial statements show a true and fair view. And in the report, you have written that financial statements do not show a true and fair view. Everyone apply your common sense and tell me, do you think that the second possibility is actually possible? The second possibility is actually possible? No, sir. Because when the reality is that financial statements are showing a true and fair view, if you write in the report that they are not showing a true and fair view, management will start protesting. They will give you explanation, everything. All right. So second possibility is not discussed in the concept of audit risk. So now please, my dear students, tell me, if I just write that audit risk is risk of expressing inappropriate opinion, if I just write that audit risk is risk of expressing inappropriate opinion, can I say then it will cover both the possibilities, 1 and 2 both? Yes. But we just discussed that second possibility is not a possibility. Okay. That is why the actual definition of audit risk is risk of expressing inappropriate opinion when financial statements are materially misstated. Risk of expressing inappropriate opinion when financial statements are materially misstated. So risk of expressing inappropriate opinion when financial statements are materially misstated. Yes, sir. This is the concept. So when you look at this full line, you will understand that they are discussing about the first possibility. Second possibility is not considered in the concept of audit risk. Second possibility is not considered in the concept of audit risk. Okay. Okay. So one more time, audit risk is nothing but, because we have an important MCQ over here, audit risk is nothing but risk of expressing inappropriate opinion when financial statements are materially misstated. Risk of expressing inappropriate opinion when financial statements are materially misstated. That means the reality is that financial statements do not show a true and fair view, but you have written in the report that financial statements show a true and fair view. Tell me, when will this actually happen? Practically, when will this happen? All right. Can I say, when auditor fails to detect material misstatement. When auditor fails to detect material misstatement, that is when this will actually happen. Yes or no, sir? Yes, sir. And this risk is called as detection risk, the risk of auditor's failure. Many students are aware about this concept, but please listen to me properly, even if you have done it earlier, because there is something more that I will add. All right. Detection risk, risk of auditor's failure, that auditor may fail to detect material misstatement. But hello, first we had this Bahubali, and then there was Bahubali 2, but Bahubali 2 was actually prequel. So come on, rewind. Give me the prequel. Tell me, what would have happened before this auditor's failure? Financial statements would have been materially misstated, right? Which auditor could not detect? So give me the chronology. What is the first thing that would have happened? Yes, sir. Financial statements could be materially misstated. financial statements could be materially misstated. And this risk is called as risk of material misstatement. This risk is called as risk of material misstatement. But tell me, before financial statements are materially misstated, what will happen before that? Sir, some employee or some system would have failed. All right. There is a risk that the controls may fail to detect fraud and error. Controls may fail to detect fraud and error. This risk is called as control risk. Our controls failed to detect fraud and error, but that means there was a fraud and error which the controls could not detect. So the origin is that was every transaction balance or disclosure. Whether you talk about salary, investments, fixed assets, depreciation, purchase, sales, litigations, every transaction balance and disclosure is exposed to error or fraud. Either it could be an error or fraud, but every TBD is exposed to some kind of weakness on it. Every TBD is exposed to error or fraud. Something can go wrong. Something can go wrong. This risk is nothing but inherent risk. Students, I went from finish line to start line. Now I will go in a chronological order. All right, from start to finish. Okay? DMART. In DMART, there is a risk of cash misappropriation or inventory misappropriation, inherent risk. But in DMART, there is a daily reconciliation, there is counting of inventory, there is counting of cash, but lots of manual processes are involved. So it is possible that the controls may fail. Control risk. Now, when both of these things happen, that means there is a misappropriation in the inventory which was not detected by the stock manager. In that case, that particular store of DMART, the financial statements could be materially misstated. The financial statements could be materially misstated. Now, when auditor starts auditing the financials of DMART, obviously auditor performs procedures on sampling basis, and it is possible that he may fail to find out some errors. And that is why auditor, let us say, if he ends up failing to detect material misstatement, then he may end up giving an inappropriate opinion. So from start to end to start, I have constructed both the situations. All right. So everyone, now you need to please focus on this. Tell me, if there is on the coming Valentine's Day, if there is a 50% chance that you will propose someone, and there is another 50% chance that the other person may accept your proposal, right? Then what is the probability that both of you will come into a relationship? There is a 50% chance that you may propose. There is a 50% chance that from your proposal, whether he or she will accept or not. Then what is the chance that you may come into a relationship? No chance. All right. 25% chance. 50% of 50%, because there is a 50% chance that you may not propose at all. And even if you propose, there is only a 50% chance that she or he may accept. So remember, hello, your foundation level mathematics. If event X has 50% probability, if event Y has 50% probability, then X and Y will happen together is nothing but 25% probability. Do you remember this? Hello? Yes, combinations. Even if you do not recollect it, now you will have to buy at it. Let me still try to connect with you practically. There is a 50% chance that inventory could be misappropriated. 50% chance that inventory could be misappropriated. All right. I am writing it over here. Inherent risk. Example, there is 50% chance of inventory misappropriation. All right. Then management has implemented internal controls. Right? Just imagine this. No, out of 30 days, it is possible that on 15 days, inventory could be misappropriated. Correct. So management has implemented internal controls, but there is a 50% chance of control failure. Out of 30 days, 15 days, inventory could be misappropriated. But out of those 15 days, 7.5 days are such where even the controls may fail. So tell me, what is the risk of material misstatement in the financial statements when it comes to inventory misappropriation? Can I say that the inventory of 7.5 days could be misappropriated and it may not be detected? Yes or no, sir? Yes or no, sir? Yes, sir. Hello, come on. Yes. So risk of material misstatement in the financial statements for inventory misappropriation is going to be inherent risk, control risk, inherent risk into control risk. 25% chance. Are please confirm this is an MCQ. Are you understanding this now? Yes. Okay. I know you are writing, that is why you're not able to type. I know that. Okay. But on conceptual understanding, you will have to confirm. Now, auditor is going to enter. Auditor is going to enter. All right. Now, let us say that there is a 10% chance that auditor may fail. All right. You know, because there are two people, first year article and third year article, who are targeting study leave. All right. So, there is a detection risk. 10% chance that auditor may fail. 10% chance that auditor may fail. All right. Then tell me, what will be the audit risk? Yes, what will be the audit risk? Give me the audit risk over here. Give me the audit risk over here. Give me the audit risk over here. Yes. 25% chance that inventory will be misappropriated. 10% auditor may not be able to detect it. All right. So, risk of material misstatement into detection risk, which is nothing but 25% into 10%, which is nothing but 2.5%. That even auditor may fail. Even if you count, you will come to know about this. So everyone, I will also write it in the diagram. That is why if you see my diagram, how I've created. Inherent risk, IR, control risk, CR. Both of them happen together. Risk of material misstatement is IR into CR. All right. Now comes the auditor. Auditor may fail. But what is the probability of auditor's failure? That percentages they will give in the question. That they will give in the question. So, detection risk of 10%. So, this is your DR, detection risk. And audit risk. Give me simple English. When auditor fails to detect material misstatements, he will end up expressing inappropriate opinion. So, financial statements are materially misstated, which auditor was not able to detect. Okay. Two things coming together. Two things coming together. Risk of material misstatement into detection risk. I have given you technical, conceptual, simple English, everything. All right. So everyone, I am repeating it for the last time. You can keep writing and also keep on hearing me. Okay. You can keep writing and also keep on hearing me. Whenever I am performing, I will connect with the previous concept also of risk assessment procedure. Whenever I am performing risk assessment procedures, I need to understand the entity and its environment. Through DMART, understand the entity and its environment. Through that, I will come to know about inherent risk. What can go wrong? All right. Then I need to evaluate their accounting systems and related internal controls. Oh, through that I will come to know about control risk. What is the chance of control failure? And then finally, I will come to know what if both of these things happen together. That means the risk of material misstatement in the financial statements. Yes. Then auditor will perform audit procedures. Auditor performs procedures on sampling basis. Even if his sample is proper, sometimes the audit procedures are not proper. So there is a chance of auditor's failure, that is detection risk. So if material misstatement is not detected by the auditor, I repeat, if material misstatement is not detected by the auditor, if material misstatement is not detected by the auditor, he will end up expressing an inappropriate opinion, and that is nothing but what? Audit risk. And that is why I've written ROMM into detection risk. I want a final confirmation. Is everyone clear with this? Yes or no, sir? Yes. Now listen to me, please. Just give me a basic common sense reply. After performing risk assessment procedures, if ROMM is high, if risk of material misstatement is high, can I say, students over here, listen to me very carefully, because there was a 25% chance of inventory misappropriation, can I say auditor will start conducting physical verification of inventory more frequently? Auditor will start visiting the store more frequently? Yes or no, sir? Yes, sir. So after performing risk assessment procedure, if risk of material misstatement is high, then auditor will perform additional procedures. Someone is writing tolerance level will be low. I'm really happy with that reply, but I will connect with that in the SA 530. As of now, I'm giving simple English. Then auditor will perform additional procedures. Therefore, we will reduce the chance of our failure. That is exactly what auditor did. He brought his failure risk to 10%. And what happens because of that is, this will keep audit risk at an acceptably low level. I repeat, this will keep audit risk at an acceptably low level. Audit risk can never be zero, because auditing suffers from constipation, inherent limitations. All right. That is why audit risk can never be zero. Auditing suffers from inherent limitations. Auditors suffer from constipation. All right. Done, done. You should always be aware about this. It is my request. I think you may have space somewhere over here. No, if you can write down. It is my request. Okay. If risk of material misstatement is high, after performing risk assessment procedures, if ROMM is high, then auditor will perform additional procedures. Therefore, detection risk will be low. This will keep audit risk at an acceptably low level. Somewhere I want you to write down this right now. Okay. Write down. Chalo. Now everyone over here, listen. You have done so much of hard work in understanding the concept conceptually, correct? Little bit of more hard work to understand the technical language. All right. In simple English, inherent risk means WCGW. Sir, what is this? What can go wrong? In simple English, it is nothing but what can go wrong. Okay, yes. But in technical English, come on, everyone, take a deep breath, release it now and start reading. The susceptibility of an assertion to a misstatement. I just need this English. Susceptibility of an assertion to a misstatement that could be material, either individually or when aggregated with other misstatements, before consideration of any related controls. Do not worry, you will understand in the next 60 to 80 seconds. Chalo. Just focus on the words which I've underlined. Other words are just additional words. Susceptibility of an assertion. Susceptibility means I am exposed to a weakness. Susceptibility of an assertion. Assertion means TBD. So TBD is exposed to water pollution. It is exposed to a misstatement. All right. So susceptibility of an assertion to a misstatement. But when I told you that when we are talking about inherent risk, we do not talk about internal controls. We just do a raw analysis of WCGW. What can go wrong? So that is why the last line over here is before consideration of any related controls. So come on, everyone. Chalo. The susceptibility of an assertion to a misstatement. Susceptibility of an assertion to a misstatement. Susceptibility of an assertion to a misstatement before consideration of related controls. Before consideration of related controls. What if there are no internal controls? What if there is no one monitoring you at your home? What if there is no boss at office? Then what you can do as an animal? All right. That is inherent risk. Susceptibility of an assertion to a misstatement before consideration of related controls. All right. And along with this, I want to also finish off one question, which is technically question of essay 200. But if we finish it right now, we will feel better. All right. So everyone over here, I am on to the question bank. I'm on to the question bank. First question bank is of essay 200. You know, if you finish the related questions, we can go at a faster pace later on. Question number 6. Question number 6 in essay 200. I'm not saying page numbers because sometimes I use a different PDF which is formatted by my team for better presentation. Okay? So page numbers may go a little bit here and there. So essay 200, question number 6. Chalo, everyone, it's a very easy question. Tell me. And all of this is there in your module, huh? Okay. So tell me, everyone. Related party transactions. R for related party transactions, E for electricity expense. Where you think there is a more possibility of error and fraud? R for related party transactions. Obviously, yes. So do you understand the English now? Look at this. Inherent risk is higher for some assertions and class of TBDs than for others. Electricity expense, yes, few things can go wrong, but there is a very low probability over there. But related party transactions, they are used for high level manipulation. Look at this, explain with examples over here. Whenever we talk about complex calculations, the basic risk itself is high. Sir, complex calculation, merger, acquisition, amalgamations, equity exchanges, valuations, all that. Complex calculations. Significant estimation uncertainty. Best example could be valuation of unlisted securities. Sir, are you going to discuss every single line of every question in fast track batch? No. But for technical questions, yes. And for other questions, I will give you a briefing, what is important, keywords and stuff. Don't worry about it. Right? Valuation of unlisted securities. Then related party transactions. Then tell me, if I give you a chance, C for cash, P for plant and machinery, where you will commit a fraud? Cash, sir, it's easy. Plant, kaun utai? All right, so look at this. Higher for assets that are susceptible to loss, such as cash and inventory. Done. You get your 3 to 4 marks over here. So I can create a proper 4 marks question. That inherent risk is higher for some assertions than for others. Explain with examples. So you give me the definition of inherent risk. I want only those words in the definition. Susceptibility of an assertion to a misstatement before consideration of related controls. All right. So what can go wrong? You give me the definition. You give me 3 examples. You get your 4 marks. You clear chartered accountancy. All right. Everyone over here. Question number 7. Question number 7. Students, have you realized that in exams, maybe you would have felt this at inter-CA level, all right, that whenever there is a question on factors and examples, you end up writing the same answer. All right? You don't know the difference exactly. Sometimes you are confused. All right? What is the meaning of the word factors? Points that help you to take a decision. What is the meaning of the word example? Every point that helps you to make a decision can be elaborated with examples. Students, please focus over here. Question number 7. Inherent risk. They have given the definition. That's fine. I'm not reading the definition. Explain the factors that may influence inherent risk. Explain the factors that may influence the inherent risk. Everyone over here. When I asked you that related party transactions or electricity expense where the risk is high, you said related party transaction. It was an example. When I asked you cash or plant and machinery, you said cash. It was an example. When I told you valuation of unlisted security, it was an example. Those 3 examples were related to only one factor. The main factor which decides the inherent risk is the nature of assertion. The nature of financial item. Yes. Everyone look at question number 6. Nature of assertion. They asked you to explain with examples. So for the first factor, the examples are there in question number 6. Look at this. Inherent risk is higher for some assertions than for others. When you are answering factors, you need to explain theory points which will help you to take a decision. All right. Like, give me the factors deciding audit procedures. Materiality of item is a factor which will decide my audit procedure. Example, no. I will focus more on purchase and sales rather than miscellaneous expenses. Come on, everyone, tell me, are you now understanding the difference between the word factors and examples? Yes or no, sir? Yes. Okay. Then, tell me, let us say that Modi ji announces, Aaj raat 12 baje se, all right, English batch. From midnight, the plastic of XYZ category will be banned. Can I say that the whole industry may go for a toss? Yes or no, sir? Yes, sir. Exactly. Then imagine the management who is holding that plastic as a packaging material. They have taken loans, working capital loans from the bank against the inventory that they are holding. Can I say they will still try to show it as sellable? All right. Even though Modi ji has banned it, yes or no, sir? Yes, sir. External circumstances giving rise to business risk may also influence inherent risk. This is a factor. Now look at this. For example, technological developments, changes in laws and regulations, etc. External circumstances which is not in your control. Then next, factors in the entity and its environment. Tell me, everyone, sometimes the nature of the operations are such. That you will always feel that there is a high risk over here. Construction company, everyone tell me, construction company, can I say right from revenue recognition to the payment to the laborers, wages given to laborers, can I say in every single item we may feel that the risk is high? Yes or no, sir? Yes, sir. Sometimes because of the nature of the operations, factors within the entity and its environment may also influence inherent risk. They have given one example, but that's fine. So everyone, factors influencing inherent risk. All right. The nature of assertion, the external circumstances, external factors, and the internal factors. That means factors within the entity and its environment. And every single factor can be elaborated with example. First factor has been elaborated with example as a separate examination question. I will go back to my notes. So inherent risk means what can go wrong? Susceptibility of an assertion to a misstatement before consideration of related controls. And when we want to understand more about it, we can refer question 6 and 7. What is the difference between my question bank and the question bank which is given normally, which is circulated in the books as a books in market? In my question bank, I'm so sorry, but I don't write the attempt reference. Because you know what? Question number 6 and 7, both the questions have never been asked in exams. One question has been asked, all right, but the other question has not been asked. One question has been asked at inter CA, one question at final CA. All right. If I give the attempt reference and the marks, I know you are a lazy person. You may end up referring to only the past examination questions and you will not refer to other questions. Correct. I'm sorry to say this because even I have been a student, so I know what kind of shortcuts we adopt at the end. So that is the reason that I want you to see things equally. I will tell you what is more important for exams. Don't worry about it. But don't expect me to give attempt reference and marks references. All the questions are there. I can tally your whole November 22 earlier attempt papers also that it was from this book only. But I will not give the references of the attempt and the marks. That is spoiling the students. All right. Okay. Everyone over here. Yes. Thank you, Nivedita. Control risk. What do you understand by control risk? Arey sir, we are done with the conceptual explanation that the entity's controls may fail. Technical English. The risk that a misstatement that could occur in an assertion that could be material will not be prevented or detected and corrected on a timely basis by the entity's internal control. Entity's internal controls may fail. The risk that a misstatement that could occur in an assertion may not be prevented or detected and corrected on timely basis by the entity's internal control. All right. And it is nothing but dependent upon how nicely management has designed, implemented, and maintained internal controls. The risk of entities control failure. This English was also normal English. Risk of material misstatement. We will talk lot and lots of stuff about this in essay 315. So as of now, there is only one line. The risk that financial statements are materially misstated prior to audit. Please understand why they have written prior to audit. Tell me in that ROMM. Tell me over here. When the inventory was misappropriated in DMart, when the controls failed, was auditor involved in that? No. So ROMM, will you agree with me that ROMM are entities risk, not auditors risk? All right. Auditors risk are the detection risk and audit risk. Everyone over here. Risk of material misstatement consists of two components, inherent risk and control risk. But why they have written prior to audit? Because these risks are entities risks. Auditor is not involved in that. Detection risk. The risk that procedures performed by auditor to reduce audit risk to an acceptably low level will fail to detect, will not detect the misstatement that exists. Come on, simple English. The risk that procedures performed by auditor to reduce audit risk will fail to detect material misstatements. That's it. Essay 200 question bank. This is very simple question. It will just take 60-80 seconds. Look at question number 8. Hello. If I want to reduce my detection risk, if I want to reduce the chance of my failure, then what are the procedures to be performed? What are the points that I need to take care of? Look at this. Main line of the question is mention the matters that will assist to enhance the effectiveness of an audit procedure and reduce the possibility that auditor might select an inappropriate audit procedure. But this is a very basic question. Read one's category. Sir, what is read one's category? Don't give too much time to it. Let me just give you a brief that if I want to reduce my detection risk, if I want to increase the effectiveness of my procedure, I need to plan. I need proper people, personnel. I need proper audit team, experienced team. I need to maintain an attitude of professional skepticism, questioning mind, maintaining alertness. I need to supervise and review the work performed. So everyone, P for planning, P for personal, P for professional skepticism, and then supervise and review the work performed. So PPP, work performed. You can take P for performed also, but then it will be too much of P. Okay. That is how I will reduce my detection risk. See, for some answers, I will go this fast. But when the answer is very technical, I will go a little slow. Understood? That is how we manage time. Idhar aa jao. So this is your question number 8. What is not included in audit risk? Everyone, what is not included in audit risk? Sir, we know it, sir, wait, sir. This possibility. Then do you have any English statement for that possibility? Sir, wait. That means auditor expresses an inappropriate opinion when financial statements are not materially misstated. That means in reality, financial statements are free from misstatements, and auditor has given an inappropriate opinion. This possibility is not included. Very good English, everyone over here. The risk that auditor might express an opinion that financial statements are materially misstated when they are not. Okay, this is excluded from the concept of audit risk because this risk is ordinarily insignificant. Okay, improbable. Second, audit risk is a technical term related to process of auditing. Audit risk does not mean auditor's business risk. What if client does not give us our fees? What if client does not cooperate with us? What if this happens? We are not talking about business risk of the auditor. Auditor's business risk such as loss from litigation, adverse publicity, this is not discussed in audit risk. In fact, in audit risk, only one possibility is discussed, and that is risk of expressing inappropriate opinion when financial statements are materially misstated. All right, everyone over here. Array students, I told you in my chat box also that in my PDF I've included some points, correct? But I have shared that particular PDF with you in the app chat box. Okay, so you can download it from there. You can see it from there also, not a problem. But in my presentation, I have included some points. If you see, I already made you write this even in the notes, right, that this possibility is excluded. Now, everyone over here, listen to me very carefully. What are the possible examination questions from the whole concept of audit risk? Hello. This interrelationship, this is your MCQ. Okay. Then 2 brief answers from inherent risk, question 6 and question 7. 1 brief answer from detection risk, question 8 of essay 200. And what is not included in audit risk? This particular point. What is not included in audit risk? This is also your MCQ. What is not included in audit risk? And for the students who do not have these 2-3 lines, correct? So they have already written 1 point, and second point they can write that audit risk will not include auditor's business risk. Okay. Done. So that is your discussion on the concept of audit risk. After this, I am going to start with auditor's approach, audit opinion, what we write in the report. If you miss out that, you will not be able to attend further standards. All right. So please be on time.